of financial position. The statement of financial position represents the assets, liabilities, and equities of the business in a point of time. Like for example, assets, it includes cash, stocks, properties, plants, or equipment, anything that the business owns. And liabilities are what the business owes from the outside parties like suppliers, banks, and business loan. Equity is the remaining proportion of the owner's financial interest in business after deducting any liabilities from the total assets in the business. So when you're reading your statement of financial position, it represents what your business owns and controls, what it owes, and the investments that the owner has contributed at a point of time. So in the financial statement of Jollibee Food Corporation, the balance sheet there is the statement of financial position because the other term for statement of financial position is balance sheet.
The statement of comprehensive income begins with the net income figure drawn from the income statement, to which adjustments are made from unrealized items such as unrealized gains and losses related to foreign currency translations and hedges. These various items are then totaled into a comprehensive income. A positive balance in this report will increase shareholders' equity, while a negative balance will reduce it. The change appears in the accumulated other comprehensive income account. This table shows the assets, liabilities, and shareholders' equity of Jollibee's Food Corporation that shows a positive balance with an increase of shareholders' equity.
If one wants to know why does the capital of a certain business will go up or will go down, it can be seen in the statement of changes in equity. The statement of changes in equity is often referred by the US GAAP as a statement of retained earnings. It is the reconciliation between the opening balance and closing balance of shareholders' equity. It is also a financial statement that summarizes the shareholders' equity over an accounting period. An accounting period is equivalent to 1 year or 12 months. So here is the example of the financial statement of changes in equity in the company JFC or Jollibee Foods and Corporation. So if one wants to know how can we get the ending equity, the formula is the beginning equity plus the net income minus the dividends plus or minus the other changes. In this, we can get the ending equity.
What is a cash flow statement? According to Britannica, cash flow statement is the third financial statement that a company produces or make. Company statement is different from the income statement, since cash flow statement is the cash in and the outflow of a company. Cash flow statement has three major parts. This is the cash flow from operations, second is the cash flow from investing activities, third is the cash flow from financing activities. Cash flow from operations are the products and services that was sold by the company, while the cash flow from investing activities are the cash spent or received by the company from the sales of investments. In this section, we can see if a company purchased an assets or even acquired another business. And the third is the cash flow from financing activities. Cash flow from financing activities summarizes cash transactions that involves raising, borrowing, or repaying of capital. In this section, we can see if a company issued new shares, cash dividends were paid, or if a bank loan was taken out.
So the notes to the financial statement is a required integral part of the external financial statement. It is required since not all relevant financial information can be communicated through the amounts shown on the face of the financial statement. The notes are also referred to as footnote disclosures. So generally, the notes are the main method for a company to comply for the full disclosure principle. This note to the financial statement is important for the GFC company so that the people who are accustomed to reading financial information are able to make informed decisions regarding the GFC company.